Okay, let's have a look at the euro dollar for the 17th of November 2015. As you can see, not much volatility, not much action in the European session. The first part of London was only 30 pips, I think, or less than 30 pips, which is unpleasant to trade, but still an offering out there. Let's have a look at your first trigger, the last range. I mean, bear in mind it's sideways. There's a quarter channel, there's a micro channel from that low to there, looking at it coming from here. So there's the high. You've got a micro channel here, one here, up to there. It bounces here. Your expectation is a pullback to this level. Okay, so which it does pull back to later in the Frankfurt opening hour. So entry order is not the path for this one. You take a trade on the close of that indecision candle. Okay, indecision candle is where the body is of no substance. Like this, no major movement, no direction, bias. So you've got this bull candle followed by a bear candle. So let's have a look at our take profit. As with any investment, you're excited about the potential and you're expecting a bounce somewhere in that range, which we do get to, and it does bounce. But this move isn't powerful. There's your first bounce point, and there's your take profit. Okay, so that is 18.5 to 17 pips for that move. I was long in here, hopeful as always of a larger move. As you can see, I would initially set my take profit to that and then to that, but my long did not eventuate. Okay, short is off this previously discussed bounce point. Now initially you would have the entry off that high, then the market fails here, so I would bring it back to that high if you were even more aggressive with your entry. As soon as this wick formed and pulled back, I would put an entry order there. It's up to you. X click, and I'll hide the channel. Once again, we're more enthusiastic than we should be, and we look at that and then realize the market has bounced there, so we're expecting a bounce in this zone, which also confirms that last channel, and then isolating and going into the last micro channel, which is here to here. Once again, expecting a bounce there. So there's your take profit. Disappointing, but that's 19 after say 18 pips. So that is 35 pips so far for the session. As I said, I was hopeful of this level being broken and the market going down further, but this is a great example. You don't know where it's going to go. All you do is know where it's going to bounce with a high probability. Entry order goes on that low, activated. You're only expecting it to pull back to this channel. When it breaks, then you take the run. The predictive break of the channel is dangerous. Just look at the bounces. So you're expecting a bounce here. It does in fact bounce, but continues on. So let's have a look. take profit is there. Now, it's potentially possible for the market to break that channel and go all the way through, but there's no volatility in here. Look at your last channel, be conservative, take profit, and there is 24.5, so 23 pips, which brings us to 58 pips for the session. My advice, nothing has happened in the early part of London. There were no significant government fundamental announcements, so the market had no reason to break any further than that. So pack up and then come back in the next session. You can see it's gone pretty much sideways until the opening of New York. Okay, opening in New York sees a fundamental announcement, and it's still just ranged up and down in a very tight channel. London drifted off to the close of London. There's close of Frankfurt, close of London. Nothing particularly exciting in the session, but still the channels are a good predictor of bounce points and a good predictor of take profits. Even in a tight 30 pip range, you can, well, a 58 pip return in a 30 pip range is fantastic. Okay, I hope the channel trading has been helpful. Remember always to look at the last element of the move to help define your bounce point. So you can see here, this bounced from that, so you'd be expecting a bounce around here. Go back in time and have a look to see where the historic bounce point is. That is the bounce point. Now, it's not a guarantee, but it's a good idea of where it's going to bounce. Doesn't mean it's going to continue all the way down. That's just the hope we give to our trades when we take them. Once we take them, we look at the shape of the move. There's nothing exciting in that little drift. So our expectation is it's going to bounce there, which it does. So go to break even, no harm, no foul. Alrighty, go well. I hope your trading is successful, and I'll come back tomorrow with a review of the 18th. Okay, bye.